Hey, what's up, YouTube? So, on 26th of January, I made a video. Okay, so on 26th of January, I made a video of this whole narrative that played out. We were at on 26th of this 26th. At this point, when we were at this point, I was looking for a measured move. If you go watch my video on 26th of January, it was around on the 17th video 17th mark. Okay, so I was aiming for this point. I haven't changed anything on my chart, and everything which was in the stream is also presented. I don't trade on this chart, so I'm just using these charts for the streams. So I was expecting either we move from this point if we get a good validation towards this point, if we move above this point. But it got rejected and it came in a no long scenario. Then on the FOMC day, I was talking about the market point. That was the bottom. If you go watch my stream on 26th, this point was also here. So that was the bottom. And this is just a quick update on the previous stream. So one, this was the point of the FOMC, right? When I was about to go, I said, okay, it can get stuck at this point. Then we move below this level, market level. I was waiting for it to move up and above for me to take a swing point. Okay, when the market moved above this swing point, I took a long at this point. When I was explaining this price point, I told everyone this is going to be a swing trade, probable swing trade, which usually is. So at this point, I get really extremely good risk to reward. Like extremely good risk to reward. So the whole market stopped at this point. It's on a 1 minute chart. You can see it's obviously I was using the word reference point for a reason. And I also told it can get precise. Sometimes it gets precise, sometimes it's a reference point. So it's a higher time frame narrative. We moved up and up. I know you won't believe me, but I'm up about 1,000 points, 100,090 points on the week. Fucking amazing. Who was here last time I was explaining all of this? Anyone? Can you comment, please? Unfortunately, not what's first stream. Looking forward to learn more. Yeah, Ash. Okay, so I gave this narrative on the FOMC, and I told with the caution, obviously, it's going to be a probable bottom, and I'm going to take a swing trade. So that proved me that it was a bottom, and I was on the 26th. I was targeting this measured move, which is how I came to this point. As the market is in a price discovery mode, so the market where the market hasn't been before, it looks for a measured move to target. So that was the point. It comes from this 3 standard deviation, and the fourth one would be above somewhere around here. If you make one standard deviation of this point, so it's closely around here. If you go up above these ranges on the weekly chart, first time here sneaking this view from work. Land shark trades. Yeah, welcome in. So if you guys have any questions, you can ask me. I'll be happy to answer. I'm not going to trade. I'm already in a swing trade, so not gonna touch it. I understand what you mean about standard deviations. Yeah, so it's a standard deviation is a relatively measured move according to the market's width. We are using the previous market width to determine where the market can probably go. So as you are assuming a position of a bull or a bear, you want to be looking the moves in measured moves. So this is why. So first you have to have your bias, then you are looking for the measured moves too. Anyways, I do not want anyone to short this. This is a strong market. How do you gauge time? Engage time or gauge time? J. I think you mean how do you engage time, right? I'm coming from MQ to yeah, measured moves. How long do you expect before swing target hits? J, it totally depends upon the risk to reward in the time frame you are operating on. How do you use your fib? I'm using the Fibonacci is you can understand the Fibonacci. It's like a standard deviation. For example, it's 1 and it's 0. The half would be the 50%. Below the half would be 61.8. Yeah. How to use your fib? I don't understand what you're saying. I understand how fib deviation. Standard deviation. A Fibonacci is a standard deviation. Everything you are looking for is a standard deviation. Okay. So this is a fib. For example, if I am projecting a target, for example, if I'm using this swing point as a whole, as a whole. So this is the 100% between the 161.8 would be somewhere around 2 and 1, and the other numbers would be around these 100. I'm using the 100 points. And if you're asking me where to apply the swing points, okay, where would you place the Fibonacci swing points, or how to place it? I personally do not use it. I just know how to apply them, so I'm just telling you. But I use it in terms of a standard deviation in a sense, 100% standard deviation. Now watch this, okay? this is a whole price range, right? This is a whole price range. Once the price, it's an hourly chart. When do you expect to hit the start standing? I'm gonna show you a recurring logic, right? You're gonna see it. Just gonna remove this. If you place, okay, it makes sense, right? See this? I'm gonna draw the same thing on a higher time frame. First, you use that. It's really not a strict rule, but you will have an idea what I'm talking about. And where this range comes from, it's a part of a bigger range. Let's go to the higher time frame, 4 hours. No. Daily chart. Let's remove all of this. Power of 3. Now you look at the same thing. You see this and that. Plus, if you, this is a weekly, this is a daily chart, and it's at the same time it's the weekly chart. So I'm gonna change this color, and you see how it's confluence. Okay, so we are working within this 14 July 2023 range, right? We broke out of this range and out of this range, this whole range. While we were working within this range, we were using this, the last swing point. As we move above this point, we're using this and that for higher and a higher time frame. So this would be on a medium term time frame relative to the weekly time frame. So this would be the weekly's range. Okay, so this was the standard deviation, which comes at 177777. It's slightly at this point, 7777. This was right. You're welcome, man. You're welcome. Okay, so this was the point at 7777. What is this point? We are using this measured move, a confluence with another measured move, a measured move within that measured move would be, you see that I'm now using this point. We broke out this, and if we use another standard deviation which happened today, you would find somewhere around 300 or 400 points. I'm going to show you. Wait a minute, just delete all of this. So as we are working within this, okay, so if we take another one thing, you see we are around that point. Obviously we are working within the daily chart, so it can move a little bit. This is what I call as the language that I use for these points are the reference points. So if you use the word reference points, it has another whole meaning to it. You are trying to navigate within the market. It's not a buy, not a sell. It's just a reference point. So this becomes the reference point in a measured move, and that becomes the measured move of this move. So it's not, it's these, please understand, every tool has its own meaning. Every tool has its own work. And I'm using these tools as I have taken a position of a bull. As the market is going up, I'm using these standard deviations for my for example, for a reference point. I'm not taking my profit at that point. I'm just how can I explain? I have my tools to validate or invalidate the trend, or where the market is going to be. So it's like I'm mixing the time frames within the time frames. But as the market is in the price discovery mode, I'm using just these tools, a simple method, a standard deviation, good old method. But I really don't bullshit. I do not lie. If you go and watch the stream, I'm not beating my chest. I'm just trying to tell you in a sense that Big G was a guy. He usually watched this stream. So I was explaining it to him. Okay, for example, the market was here exactly at this point. Now, I told him, okay, either we are going to use this leg to move up to that standard deviation, or we are going to come down at this point, below this point, and that would be the manipulation leg 6 days before it happened. So it's like it's a sophistry of thought. It's literally a sophistry of thought. I can hold a thought, like I can hold a bias or a narrative within the narrative within the narrative. So it all comes down to this. It's really hard. It comes with experience and a system, obviously. So it's like you see how it played out. I haven't changed any literally anything. If you go, I have given the coordinates on the 26th, and I have given the coordinates. Everything was here. How to use options successfully if I anticipate where the price will. But applying time decay is difficult to trade. This is why I'm watching. Can you explain me in non-option terms in a simple language, please? It all comes down to these candles now and the time frame. If you understand these candles, if you understand where the market is going to be, how to form a narrative where the risk to reward is, it's all derivatives of this chart now. Basically, if you are reading the market correctly and you are anticipating, your anticipation is right, you can do all of these things easily. uh, by the way, I have told you or not, please do not short this market. As it is an extreme, its obviously move has a lot of up, so it would be like more like a high risk sells, low risk buy, but with a good risk to reward. Only if the market gives you a good risk to reward, then you can. Otherwise, you have missed the entry. So if the stock is going to some price, I want call. Yeah, it's I understand this point. It's simple, I understand. So obviously everybody makes money when your anticipation is right. Options and all of these things are the derivatives of this market now. Using a fib and anticipation, no, Jay, you need a system. The Fibonacci doesn't work like that. You need a complete system. The system is like there is no course or there is no syllabus, so we cannot differentiate between the things. First you need to know the direction on the higher time frame. I don't know how you figure it out. Just gonna make a map, okay? Just gonna make a map. First you need to somehow figure out how the market works on a higher time frame. Why I'm saying higher time frame? Because it's relatively easy. Okay, first you need to differentiate the time frames. You are taking an account of for example, it's hard for you to understand there's 1 minute time frame, 5 minute time frame, 10 minute, 20 minute time frame, and all of these time frames. So you want to categorize those time frames within an hourly time frame, okay? And you are gonna use some language. As we are applying some language, it gives us some model to work on. My mind will perceive it as that as an act. For example, if I'm saying the higher time frame, mediums, three types of time frame. Highest higher time frame, that would be the daily, the weekly, the monthly. The daily, the weekly, the monthly, and you'll see resemblance of each other within these three are relatively same. Basically, you can see monthly time frame on the daily time frame. So it's three three standard deviations. Okay, I'm just giving a map for you to make a model or a system if you so the weekly, daily, and the monthly would be in the same category. Then there would be the next would be the daily, the 4 hours would be the medium term time frame, and below the 4 hours and hourly is the smaller time frame. Or you can understand that below the hour have a mind map of three categories of understanding. For your understanding, there are three trends within the market. I'm going to break it down for you to understand easily. So there are three trends within the same market. Okay, so there would be a trend on a weekly time frame. The same trend would be on a daily time frame, and the same trend would be on a monthly time frame. It would initiate from a monthly time frame. So from monthly, weekly, and daily would be in a one category. The daily and the 4 hours would be in the same category, and 4 hours and below would be in the same category. So you understand what is the trend. I don't know how you figure it out. You'll figure it out easily. You making a model or any base for your understanding. Yeah. No, I'm taking a statistical approach for us to understand, for our mind to understand. Okay, so I'm using the words, plus I'm giving a model. If I'm coming 50% and you have to come 50%, so we'll more meet the middle. So first you want to identify the trends, how the trends work on the highest high time frame. That would be in the category of weekly, the daily, and the monthly. Okay, this is the whole another category. Then there would be 4 hours till daily is obviously linked to 4 hours. So there are three trends within the same market. The most fluctuating trend is below 4 hours. I'm generally speaking, for you to make a model, you have to backtest, and you'll come to this realization. If you just take this point of view of thinking, you'll come to this realization. Okay, if you are breaking it, I'm just giving a vague model, mental model. Okay, so below the 4 hours would be a lot more fluctuation, and the ATR. Everybody gets fucked up below the 4 hours because there is a lot of fluctuations and noise. You can say noise because it's extremely difficult. I'm just telling you. First, as a beginner, as you are saying, you are using a standard deviation or the fib models to project a target or anticipate. No, that's not how it's work. First, you need to identify these highest high time frame trends. Then you have to backtest how those trends work again and again and again. Then you have to understand your life as a trader. For example, if I'm watching a monthly chart on a monthly single candle, it's just a single candle, but to live that candle is a whole different thing. to hold the single thought on that time frame is a whole different thing. If you are back testing a weekly chart, you should understand it takes a whole week. it n- I'm just saying these things, you have to live it, you have to understand it, because it we can back test on a weekly chart, we can back test on a daily chart, but at the end of the day, if I'm new, I would be entering out in a trade without understanding. If I just leave this shit open, it would go in my favor while scaring everybody out who is trading on a higher leverage or 4 hours or below time frame. So first you are identifying the higher time frame trends, then you are looking for the medium time frame trends. This medium time frame trends is would be the best for you initially. So you want to correlate these two, the first monthly time frame, then the 4 hours and daily time frame. If you somehow correlate these two time frames with, if they are against each other, there's a contradiction, so that something is changing. You're following up with me or not? Am I making sense to anybody? Just checking. Okay, so you want to categorize. So the first we would be looking at the monthly chart. For example, I'm looking at this monthly chart. I'm gonna remove this. For example, don't you see the same thing we saw on a smaller time frame? This was the point, we broke out of that point. That was the daily candle we saw. A good reason. When I see a good reason to large share trades, it totally depends upon your system. Totally depends on your system. Okay, so you see this point. We were measuring this point on a 4 hours chart. 4 hours chart, okay? Because this was the standard deviation, I guess. Yeah, this was the standard deviation. So as I'm looking at the monthly chart, so it on an the guy who is new, or is most of you guys haven't how long, like it's like are in, if you are in this chat or you're watching live streams, I guess you haven't been in this trading game for like 3 or 4 years. Probably not. It's just random guess, but majority of you do not understand what it's the, like it's a monthly chart. It's like it was 2 years ago. It's 900 days, and the market remembers, like it's working within that time frame. It remembers the standard deviations and everything. So you're using, it's the same trend, which you know what trend it was. This was the trend. That would be the breakout. That was the breakout. That was the bull flag, right? You move up and up and up. It's the same thing, but within the month, a lot of thing happens. For what? To fuck up the risk to reward ratio. If the market is moving from point A to point B, it's, as ICT would say, it's predetermined. It is predetermined, and it's a you can understand there's a buying selling pressure also. There's also a buying selling pressure, because why would the market move up um, in the price discovery mode if there is no liquidity up there? So anyway, so we are working within the monthly, the weekly, and the daily. So you want to identify, for example, if you want to identify what's happening on the monthly chart, you may think, okay, it's a monthly chart, who would give a shit, who's waiting for that long? No, it's a totally flip thing. You see how the monthly chart is reacting. If a price is, for example, this is a box, this is a box, for example, this is a box, and we are within working within that box, and that box is the extreme. Okay, and the box is the extreme. The moment we reach to the extreme, the price gets a reaction. So it's a totally flipped thing. Most of the retail traders would look at 1 minute chart to keep their self updated, because they think that's the head of the snake. It looks like that. So it's not that. If you look at the monthly chart, that's an extreme. And on a 1 minute chart, the market moves, but it's working within that monthly or the higher time frame extreme points. The trend is still intact. It moves, fucks everybody at within the time, because they can only, if there's a manipulation, they can only manipulate us through time, and we manipulate ourselves through time, through thoughts. They gave us time, and through the longer we wait, the more we think. So it fucks up, in a sense ke I'll be getting a FOMO. My personal reactions, how I'm feeling, would get in as they are staying up and above this point. For example, then it's gonna move back this to this point, then to the monthly time frame extreme, then we'll get a reaction. For example, so it's like if you high ultra plus trades. So if you are looking at this monthly chart, what can you derive from a monthly chart? What do you think? A monthly chart volume imbalance is better than a 1 minute volume imbalance? No. A monthly chart volume imbalance works to the tick, to the fucking tick. And if you are using the monthly chart fair value gaps, you would really see some good reaction out of that point, because it's a monthly chart, it's a monthly time frame extreme. So so we are using the monthly chart, the weekly chart, and the daily chart for our longest time narrative. Longest time narrative. Then within that narrative, we are looking for the extreme points against that narrative. A fair value gap, if you have your bias correct, right? A fair value gap would work as a, for example, if I'm going to show you this point. On an hourly chart. Yeah. If you see this, you would say which fair value gap to work on. Okay. If I'm working within the hourly time frame, so I would categorize it into 4 15 minutes time frame. Okay. And within that 15 minute time frame, I'm minute by minute looking at the 1 minute time frame as the 5 minutes close. So okay, so I had my direction right. See, okay, every fair value gap, every volume imbalance, everything is going to work as you have your direction right. So first you need to figure out how the direction works and how the direction contradicts with each other, and what happens when they contradict with each other. It will probably form a range, it will distort time and do all of this. Wait a minute. Wait a minute. Okay, so minute. How do you determine the market works? Ultra Plus Stage, this is my system I've created. I have created this system from scratch, and it's like I cannot teach you even if I try to. So it, it's like anything. This I learned in a very hard way, man. So anything you see, remember everything of this chart, like as a back of my hand, because I had to. It's not like I'm beating my chest. I had to. There was no other way. So it's, well, it's like a, if you pay attention, if you pay conscious attention to anything for an extended period of time, it's bound to become extremely beautiful. So it's like, this is what comes out of it. See, I was saying, no, no, what do you say? No longs. Okay, so first you need to understand the monthly time frame, the weekly time frame, the daily, the 4 hours, and the daily. If you have this figured out, then if you have, for example, if I have figured out where the market is going to go, the job is not done yet at that point. First, as I was learning, I figured out that point. I was like, okay, my job is done. I can swing trade and I can do this, that, and the other. No, then you have to seek a good risk to reward. I'm literally telling you the crux of things. Even if you have your direction right, the market whole job is to fuck up your risk to reward ratio. It will do anything to fuck your risk to reward ratio. So it comes with patience and everything, but it's like a first step, the basis would be to for you to determine the trends. You guys, who are looking for these things as a fair value gaps, I'm gonna use I'm gonna categorize this thing. Fair value gaps ho gaye, and the other would be the volume imbalance. The other would be anything, the inversion fair value gaps. These are all areas of interest. These are all areas of interest. This is not bias. Figure out how the bias works. You can only figure it out by back testing. And what do I mean by back testing? Back testing what? You have to, if you want to be successful, I'm going to be very fucking honest with you, man. It's a lot of work. It's really, 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 really a lot of work. So you'll know why a lot of people are not successful in this industry. After the while you're working, the working you are doing, the work you are doing, you'll realize okay, I understand why nobody does these things. So it's like if you are looking at this time frame using these, for example, I'm using the power of threes within the certain time frame, the daily chart. Okay. So back testing would be, you have to back test the close prices of if you want homework, you can go and back test these things separately. First, you wanna back test. This is a basis of back tested. If you successfully do it, and if you make a model for yourself through this rough idea, you'll be able to do a lot of things. Okay, so this is the close price. Okay, this would for sure develop an intuition. For sure, there is no way, but you have to do it again and again and again a lot of times. What does this represents? This blue line represents the previous month's close. Previous month's close. Where does the previous month's close is? You see this? Every candle has this blue dot, has this blue dot, has this blue dot, has this blue dot. Every candle, previous month's close. Close. I think if you are using the close prices, you do not need an open price. Why? Because if I were to build a market, the first candle would have an open, the next would have the close. Where would the next candle open? Where the previous closed, and would move up. Where did the next candle open? Where the previous closed. So I don't need the opening prices. Generally speaking, I'm not getting precise here. I do not need the opening prices, because relatively, if you statistically speaking, they are all the same. We close here, then we move to this point. Did we need an open? No. But if there is a gap within the open and close, that would become the volume imbalance. Did something click? It becomes a volume imbalance because between these closed prices there's a gap. So the market refers back to that point. I hope it clicked. You see the market is going up. This is why I was saying no shorts, or please do not short the market. So okay, learning, see, it's everything. You look at this chart and everything within this candle, everything you will see is within this candle. Okay, so do we need an open? No. This was the close, this was the close, this was the close, this was the close. And if we include an open, that would only create a mess. Okay, so where did the price revolve around? The price revolves around the close. Which close? The monthly, the daily, 3 days, 5 days. It depends on the market itself. You have to backtest. You have to keep a framework. Being a scientist, you have some what do you say, assumptions. Based on an assumption, you follow along the logic. So based on the market, so first we are talking about the NASDAQ. It's the monthly because I'm saying it's monthly. So this is what I'm saying because I've backtested. The monthly, the price revolves around the monthly. Even if it does not revolve around the monthly, I can have an idea that we as humans have habits. Okay, our cycle runs around a 30-day cycle. Okay, so the highest time frame I'm using is the monthly chart. If the price moves to an extreme of the monthly chart, everybody would be out who was against the price. If the price was, for example, if the market is here and it stays here for 22 days, every guy would be convinced that we may not come at this point, who's impatient. Okay, then the market moves to an extreme point. For example, if there are 4 days left to this candle closing, okay, we'll move to, stay here, stay here, stay here. One day, the whole day goes by, you sleep, you eat, then the other day, then the other day. So at some point we'll realize, okay, shayad, maybe it's not coming down. Then it's at 4 days left for just generally speaking, it will move to the extreme point, then to the wrong direction. And when it moves to the extreme point, when it moves to the extreme point, it moves to the extreme point when there is a perceived risk is high. Perceived fucking risk is high. You see how they fucked us up in a sense that there are every week there is a, what do you say, FOMC and all of these news events. So at these news events, the perceived risk is high. As the perceived risk is high, the price moves to an extreme. What does FUTK up mean? Fuck us up, matlab, in a sense ke they liquidity runs. Yeah, news, high impact news. So mm, 17,688. Sure. So the price is revolving around this extreme as I'm using the monthly time frame. Okay, so is it all? No. I'm using 3 extremes. We are using the end dogs for, you do not want to go to the marketing level of this thing, just use the close prices. Okay, it's in dog, I get it, man. But the only thing which is really useful is the close prices, unless and until there's a huge gap. That would be a volume imbalance. It called a volume imbalance on the monthly time frame. So we are using this. So as we go, see this, we are monthly close. This is a single candle. Keep this in mind. A single candle we are talking about. It takes 30 days to close. So monthly time frame. As we go to the daily time frame, we are looking at the monthly time frame. Okay, you will say, okay, oh, it's not precise. Look how odd they look. No, 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 no. Just we'll if you take a narrative of power of 3, this becomes really amazing. Just drawing this line and using it as an area of interest and power of 3. There are two uses to it. Okay, you're not using it as a buy or a sell. As you're using, everything on your chart should have a meaning. Every dot should have a meaning to it. Okay, how are you using it? Why are you using it? How to use it, when not to use it. So it's a lot of fine details, sophistry. I am using these close prices as a power of 3. So the market would refer back to the point. You see this? We opened on 24th January, 1st January 2024. We moved down. This is a monthly. We are looking at the 4 hours, but this is a monthly candle. You keep that in mind. There was a single dot on the monthly blue line, okay? There was a single blue line on the monthly chart. But as you zoom in, it's all power of 3, okay? See this? You'll say, okay, it's not come on, we will get to that. We'll get to that. As you move back and back, you'll see it happening and again and again and again and again. Then you'll integrate the time perception with your trades. For example, if I'm trading on a 4 hours chart, why the fuck would I close my trade when I'm scared within the 2 minutes of my entry? So as you make a system, you will see that the system getting perfect and perfect, but your behavior would not be aligned. As a newbie, you do not understand the validity of a system. You apply a system, I can assure you 100% that system is not being properly applied, because there are a lot of other things involved. Your behavior is not aligned with your system, so obviously it's not giving you that. For example, if a system has so-called 1,000 or 100% win rate, that would only reflect, if I'm new, by my talk you'll understand where I'm going. Okay, if I'm new, that would only, if even 2 years into my trading, that would only reflect 65% win rate. I'm being very honest. So how the hell would anybody know, okay, is the system working or my behavior is aligned or not, unless you are extremely self-aware? Extremely. So okay, so first 4 hours chart. Okay, so you are using the monthly. You have to keep in mind that there is an extreme point of the monthly, and we are using the close. While we are using the close, we are on the week monthly. You see that breakout? Just gonna make a simple narrative. You see that I'm not gonna draw everything. Is gonna be like, okay, chalo. You see that simple breakout? We did this right now on our on a 1 minute. You see this breakout? So this is a simple breakout working, okay, on a monthly time frame. So, but it's been like 457 days. Okay, so the market remembers its previous time frame. Hello, Luis Silva. How are you, brother? So the market remembers its previous time frame relative to its previous. For example, if a trend on a monthly time frame would refer back to the monthly time frame standard deviations. So nothing is good, man. Nice to see you here, brother. So thanks. Okay, so for example, if I am working within the monthly time frame, I have to, I will forget. I will do my things. The life will go on, but the market won't forget. It will use the same standard deviations of the relevant time previous. For example, if I'm using the monthly time frame, it has its own standard deviations according to the which the market determines its extreme. For example, if we are using any more, if you want to backtest, Darkam Abdul, hello bro. Okay, if you want to backtest, just do two things today. Okay, if you really want to if you really want something out of the stream, you have given your time. Just plot this first, this thing, then the monthly volume imbalance. These two things first. Okay, so the daily chart. No, we are on the 4 hours chart. Four. No. 4 hours. What to do? Okay, so we were on the 4 hours chart. We- Remove this on 20. You see this point? Don't think we get the TGIF set up today. It's too late, brother. It's too late. Okay, so as we are on the 4 hours, you are looking this only line becomes it's not. It's first you understand it through the reference point, reference to the monthly time frame. Then you are looking at the this close price as the power of 3. Power of 3 is the first the wrong direction, then to the right direction, as simple as you can understand this. So this was the 1st January, this was our month. Okay, you'll see this recurring pattern again and again and again, plus you'll see a lot of bull flags, a lot of, if you backtest you'll see this market is built like this for some reason. US 100, a lot of it, like really. Okay, so this becomes the previous close. We move down, then we move up, so this becomes the reference point. Plus, if you look at this point, sometimes it gets really precise. Sometimes it is, if you look at it closely, if you move to the previous one. So this was the previous 30th November 2021. We opened, we gyrated around this point, moved up, referred back to it. So it's a power of 3. We are working within the monthly candle, using the 4 hours as a magnifying glass. So the end dogs is not a new concept, as you used to start to use close prices. You'll realize that the whole market gets connected back to the previous close. The open really doesn't matter. So the market gets connected back if there's a gap between the open and the close. So the close to close. If you are using the open prices, you would only need an open price when the market was first open. The first 1 minute candle was open. So at that time, you would only need an open. Otherwise, you don't need an open price. The close price within the close price within the close price. So the next would be if you look at this point. Oh, why the fuck is ad showing up? If you look at this point, okay, you want to, okay, so you guys have known about the previous week's close, the previous day close, the end dog or the end walk. So the same logic, I'm using the same logic using the monthly close on the in NASDAQ. You go and backtest, you'll see a lot of things. Okay, you will see a lot of okay, so I was telling you about a framework of how to backtest, right? So you want to backtest this, go back far back as you can, at least for 5 to 6 years back, using the monthly candle. If you can, in a detail, use a 4 hours chart. You are not using the market to build a narrative. You're not using a Fibonacci. You do not want certainty out of your back testing. You just go and be aware, be conscious, and just see this thing again and again and again and again. You'll come to a realization ki what's possible and what's not possible. As you're looking at this framework, you'll realize a lot of recurring things which I cannot tell you. You have to look at yourself, because at the end of the day, you are the one who is going to make a decision at some point while trading. So your gut should have a good reaction out of it, but because at that point you'll know, okay, this I have seen this enough. It takes at least 15 days to complete a trend. It trend takes long enough. How much usually a trend lasts? It usually lasts, for me, it's like on 5 days to 15 days, depends upon the validity of the trend. I have my own things to valid or invalidate the trends. So, okay, so you watch this, how the close price is working. Do not forget, this is nothing but the close price on the monthly chart. Okay, so using this again, the wrong direction refers back to a see how precise it gets. Then it moved up, never look back. So keep this in mind. Okay, can we or can we not, using the same thing as the close? You see, you know what TGIF is? TGIF. TGIF is, for example, can we go and inquire in this direction? For I'm not assuming, or I'm not stating a fact. Can we go in this direction just to understand how candlestick works? If you think the wrong direction, the right direction, and where it closes, the previous month would become the TGIF on this, for example, on this monthly chart. The same thing would work on the weekly. If you plot the weekly chart, you see this. First you do this previous week, then we include another layer of complexity to get more precise and get more trades. As you are moving within the time frames and smaller time frames, your risk gets high, plus you get the high trades, risk to reward, and you get a lot of trades. Okay, then you add another layer of complexity. Previous weeks open, no open, we use the close prices. Now watch how it dances around. Okay, take a good look. At this point, we know, okay, for example, if you're just using these two close prices, you exactly know where the month started, while even on a 5 minute time frame you want to somehow link the smaller with the higher time frame. So this is a good way to think about it, or good basis to formulate your model on. So at this point we know, okay, it's the first week of the month, and how can I differentiate the first week from the second week, from the third week, from the fourth week? Just by back testing. If you just plot this monthly close, and you see the repeated things. For example, if the month start here, it moves to the wrong direction, then the right direction, somewhere around 15, 16 or 17, something always changes. 15 dates, these dates, and usually there would be a news at these dates, so always changes, you'll develop. So this was the point. So we somewhere around the 10, 11, 12, moved to the up, moved to the real direction of the monthly time frame. See this blue flag? Okay, so first you are using the monthly close, then you are using the weekly close. The weekly close would become the end dog. And you can also have an idea, either we close to this point. You see this point, the previous, if we plot us an open to this point, if we have a gap at this point, we know the market is going to refer back to this point because there's a gap between the closes. So we draw the whole end open and close. That becomes the end dog and walk. So first you're using this monthly time frame. Monthly time frame, you go back 5 years, at least 5 years. 5 years, you see these patterns again and again. Then you go back again. Then you repeatedly do this at least you will gain confidence as you go and do that back testing. You'll realize, okay, I can do this on my own. I know how and what to expect, what not to expect, what's possible, what's not possible, what works, what doesn't work. So you would be able to differentiate. So first, the base narrative would be you're using the monthly candle, then you're using a monthly candle, within you're using the weekly candle. So this was the second week, the third week, the fourth week, the new month open. This was the first week, second, and the third, the close. So first you're using at the previous month's close, then you're using the weekly candles. And in reference to the weekly candles, you're looking at how the TGIF works or not. As we are moving within these time frames. So first you have back tested this level. You see that? Oh, how are we doing? How are we doing? You see this? How it's gravitating towards that level. I don't know if we're going to close here or where, but it's like it's high risk, high risk sells, low risk buys. So okay, so in the hourly, okay, as we move to the hourly time frame, you're looking at the close and how we are far from the close, and how much far we are from the end dog, and have we taken out the liquidity from the end dog or not. So you make your own systems to go through all of this first, then you can easily back test the TGIF if it works or not. You just look at this point. At the end of the week, you'll see really is it really working? Does it really works or not? You look at yourself, like look at it for yourself. This was the close. Did it work on Friday? Yeah, it did. Did it work here? I don't know. Sometimes it works, sometimes it doesn't work. You'll be able to realize that a lot of things are not really helpful. So a TGIF is for you guys, it's a very good thing, because a lot of traders want certainty. There is no such thing as certainty. You don't want to make a certain model, or you do not want to look for some ratios or Fibonacci's that would give you a very solid model, solid in a sense, rigid model. Every time you'll have a rigid mental model of the market, it will break as soon as it will get hit. You want to have some general expectations. Within that general expectations, you make a narrative. To frame a good risk to reward. So it's really never certain. If you go looking for 61.8 or 50% or any other tool to give you some, it's my saying would not help you go and backtest at least 5 years. Just look at this first, just 4 hours. At least it would give you a standing chance for you to understand how the real market works and what are the extremes. You go back as far as you can, as far as you can. Okay, so you're looking at it again in detail, every candle. I'm not charging you for this, so I'm going to be as raw and as hardcore in a sense as the real I have learned. I'm going to tell you, if you want, you can do this. You will have a really good idea. I'm 100% assuring you won't get anything from this, but if you just go back and look at these clauses in reference to in taking this point as a reference point for the power of 3, then you are looking at how the candles, you'll see a repeated pattern between the month, and you'll realize okay, the news is garbage. As far as you go and backtest, you'll realize a lot of things are bullshit. The market is a machine. The machine works like, as you would see me do again and again on a 1 minute time frame. Yes, it hasn't delivered to the downside, now it has delivered to the upside. Look how it's coming down, coming up. So it is programmed to do like that. And the real trends is on the weekly, on the monthly chart. So uh you're looking at this closes. First you go back far, looking at it, you'll realize okay, how it works. You'll realize a lot of things. You cannot just state some one or two statements that would dictate your trading. There is no such statements. As you go and backtest, you realize okay, it, sometimes it gets really hard, sometimes it gets really unpredictable. You'll realize for yourself. But there is an order within all of this chaos, and you have to be the order. So you have to use a lot of discretion to frame a good narrative. Is everything. Without discretion, if you want a mechanical model, it's bound to get failed. I know, because I know it will be like ladder and snakes. You have to make First, you have to identify how the closing works. Then you are looking at the 4 hours within the weekly closes. Now you totally understand how the weekly and the closes work. So if you want to trade the intraday time frame, then you are including one other thing, this PO3. And if is anybody watching? Yeah, sure. Okay, so mm, mm, mm. so this then you're watching this PO3, power of 3. This is the close price. This is the close prices of the previous day close. I'm using the end dog within the reference of these points while determining a bias using measured moves. Hope it helps. Understood? Hello? Any questions? Yeah, Jay, it's like it's go and backtest, you'll figure out easily. Thanks, man. So you are thinking, HK, thank you so much. So you are thinking in terms of, if you somehow, I am at this level, if you catch it, you'll be really good at, you'll get really good if you understand this concept. Exactly. We get stuck when we don't know what to do, or where to go. So our mind has a reason for us not being active. If you have a direction, and if you have will, obviously no one can stop you. So this is a very good direction I'm pointing you towards. This is a pointer. You don't take my word for it. This is a pointer. Go and backtest. You won't even need me. You will realize, okay, this is how candle works. I don't care what Sal says. This is how candle works. I do really understand. And what can I take seriously? The monthly and weekly candles, and how the extreme works, and how the manipulation works, how the manipulation leg works. What concept is this? Mark Lee's, this is me just trying to teach myself how to trade, and I have taught myself through this way, and I learned along the way that it's a hard thing. So this is the way, and what can I say? But this is the only way I've found. If somebody is giving you something sweet or digestible, um, I think you are the product for sure. So this is the way. So when you are okay, so you understand that the close prices, the concept of close prices, right? And if you think in terms of okay, so I was explaining a concept. If you somehow, it's a twisted concept, but if you somehow understand risk to reward with respect to time for some fucking reason, I'm trading this futures in a sense. There is no, it's a twisted concept, but if you wait and buy at the right time, right, not time, no. If you buy at the right place, area of interest, and if you wait long enough, majority of the time that trade will pan out. Not only will it pan out, subjority, not only will it pan out, it would give you an extremely good risk to reward ratio. Extremely good risk to reward ratio. So this is, I am training myself again. I was into day trading, the 23, the whole 23 I day traded, but I'm focusing more on swings now. So if I'm taking a trade which is supposed to be 5 days, I should not touch with that trade. How do I know it's supposed to be 5 days? Because I have back tested and I know what's normal and what's not normal. You see, Jay, you'll have an idea what's not normal and what's normal. You'll have an easy idea, okay? What's normal and what's not. For example, if you are thinking in terms of, okay, I'm gonna take a trade and I'm gonna exit it at this certain 61.8 level, or after, you see how I am, how ICT would say, okay, he's my mentor. I really respect him, but he would say, okay, because I understand the human brain to very depth. I really understand it because, for example, if you are stuck within some thought patterns, okay, nobody is going to change it. Nothing is going to change it. Yes, I understand, but I'm trying to make a case for something. I'm just saying, if you have something, you're working within the framework, and unless you zone out and look for a totally different thing, you won't be able to figure that thing out. For example, ICT would say, okay, the only thing in his model is, which is not really he's working on, is where to take profit. Okay, he would repeatedly said that in his streams, where to take profit. He would take profit at liquidity zones. His entries, his risk to reward is on point. Everything is on point. But he himself is saying, "Okay, I'm." So I understood this, and I seen Tom trade trader Tom. Yeah. It's his worst trade. So this was, I was explaining, if you are stuck within some thought patterns, even if you get old, nobody is going to uh, change that for you. The only thing that's going to work is consciousness. If you are just conscious and self-aware, the only thing you can reprogram is yourself, your brain. So you have to disengage from the market. For example, if I am saying, okay, I have, for example, if somehow I have figured out, okay, this is where I want to buy. Okay. For example, as this is where I want to buy. Okay. As the price is moving up to this point, for example, the price is moving up to this point. As it's moving up to this point, I'm for a natural human being. For example, take me. Okay. I would become happy. My state is oscillating. My internal state is oscillating up, down, up, down, up, down, up, down. And the more I look at this trade, the more I feel the more I feel a sense of responsibility, a sense of tightness, as you can understand. To remove that tightness, or my mind would say, okay, what's the cause? It will look for the cause. It will look for the cause again and again and again. What's the cause? Subconsciously, I would project it onto the market, and I will close the trade and I'll feel relief. But you disengage totally. My internal state has nothing, literally zero fucks given to the market. My internal state is oscillating while the market is oscillating, so it fucks up. When you have back tested a long time and thoroughly, again and again and again, you will develop an intuition, plus you will develop a thing, a very deep thing. For example, you will know which thing is possible, what is not possible, what range is possible, range is not possible. I know it gets a lot of difficult. Okay, what is possible, what's not possible. For example, if you were working within this range for an extended period of time, a lot of new traders will forget that the market can move to this point smoothly. Okay, so if you go through 5 years, 10 years, first build a framework through your back testing, then you go ahead far in the dark 10 years back, then you build some confidence back testing. And it's not you're just going through this istara. You're just looking at each and every candle. It's moved up. For example, if I'm trading this fair value gaps, I would only be I have a projection of a fair value gap and where to look a fair value gap. I would only be looking a fair value gap where it's working. And a lot of times where it's not working, my mind would not show me somehow. It's a tricky thing. If you go look for something, you'll find it. Definitely find it. If you want to make a case for something, you'll find it. So it's like either I have to be completely objective about the market. I do not have emotions. The market cannot take anything from me, cannot give me anything. I'm totally. It's like a totally objective thing. It's an alien thing. It's a machine. So you were add the word machine, in sense it's a dumb thing. It doesn't really care how much money you earn, how much money you have taken, lost. It really doesn't care. So you take the psychology out of the market, right? Completely. You have taken the psychology out of the market. So you go. So first time you will go and back. Okay. Psychology. Okay. So you're looking go being a scientist. Okay. So you're looking to back far and far back. What's gonna happen is your mind will try to build a model to get itself out of anxiety. In a sense, if it's broken, if it's something is broken and you're looking for it, you're trying to gap those holes. Okay, so you don't want to do it. You just go back and just take a deep breath. 5 years back, just look at what it is. Just look at what it is. You don't want to find a fair value gap. You don't want to find anything. You realize, I swear to God, you realize a lot of things. Repetition builds habit. It definitely builds habit. It's obviously, but you do not want to repeat the same. In a sense, if you go in this direction, you realize, okay, for example, you go in. First, you go look for a fucking bull flag. you'll see a lot of bull flag. I'm specifically talking about the NASDAQ. It's the market is built in a certain way that it creates a bull flag for some fucking reason, I don't know. And if it's a higher time frame bull flag break, it's going to go some direction. And I am saying this thing because nobody taught me. I'm just seeing something for what it is. I don't know what it's called until I heard, okay, this is bull flag. I'm using a lot of complex thing, but I see a lot of bull flags working. So I was like, okay, it's specific for the Nasdaq. So if you guys trade, I haven't seen anything more beautiful, more really gorgeous than Nasdaq. I don't trade ES. Dow is a beast. Dow will do fucking everything to fuck your risk to reward ratio. Dow is ego trading, like for sure. I have traded Dow enough to hurt myself. It's not that I cannot know the direction. I'm just gonna save you a lot of time, okay, by saying it a lot. From the point A to point B, the market wants to go. Okay, I know it's going there. Okay, I will take a trade somewhere around. For example, if this was the area of interest at this point, Dow will move like 100, 200 points easy to the wrong direction than to the right direction. It's like, ugh. And then it'll move to my direction. So I was like, nah, this is cheating. So if you have some strategy, I have traded a lot of strategy. I know a lot of strategy. I'm just saving time. Do not just try not to trade the Dow because it moves a lot of points. Usually, newbies get stuck into this thought patterns trading the Dow because it moves a lot of points. You don't think in terms of point. You think in terms of risk to reward ratio. Okay. When you think in terms of risk to reward ratio, how can you frame a good risk to reward ratio? Risk to reward ratio is a standard deviation, okay, from this point. For example, the market moved to this point, okay, but my stop was slightly below, okay, which would be a 20th of this. For example, a 20th of this, and the market respected that point and moved up. I am up to 20R. Okay, Nasdaq gives you a good risk to reward ratio. The Dow will do everything to fuck you up. So if you are trading the Nasdaq initially, it would really be helpful for you, but it can get vicious, so careful. Okay, so I think this is enough. Anything else? Did I made myself clear? So basically, it's a three. First, you want to look for trends. Then you are looking a layer of power of three within the trends to give you a good risk to reward ratio, while having a point of reference and an area of interest. While having a point of interest, an area of interest, the point of reference, and when the price is below the PO3 line, the close line, you're using that as a reference point to where you are right now, or where the market has been. Okay, so and then you're framing a good risk to reward ratio through trend if you're using a structure, then you can trade smaller time frames like this. If you're just using this structure and frame a good risk to reward ratio, but first initially you have to understand how the trends work and where the market will have a tendency to go. Do not ask anybody. I'm going to save you years of your time in this stream. Do not ask anybody. Nobody is going to help you. At the end of the day, you are going to do it yourself. Every fucking thing you can think of, you have to do it yourself. So nobody is going to give you some sort of a magical thing. This is a right thing to develop an intuition. I swear, if you just do it a month, if you take screenshots, if you do it a month, first you make a folder of these screenshots. Yeah, exactly, Lewis. If you, I swear, I'm gonna make it very easy for you. Okay, not in terms of I'm gonna say okay, it's easy. I'm just gonna organize it in such a way. You go back test. You take every you. For example, if I am using this, okay, this is what I do. So I'm just I do not advise. Only advise things which I do. So this whole part, even on your phone, you do not need a specific time to go back testing. You just need a phone. You go through. You keep. Can you make a habit? Can you? It's because if you have a certain dedicated time to it, it won't be really possible. It's like once in a week or twice in a week. You do not want that. This should be a very casual thing. For example, if you have open a 1 hour or reference to the 4 hours, you have taken a screenshot of this month, then this month first you do this month, then this month, and you go back, take a lot of screenshots in such a way that these are possible. This is visible. So you would be operating on a 4 hours chart. Okay, so you have taken a screenshot on this every monthly candle. So once you are operating on a monthly candle, you really do not want, and you have backtested a lot, you would really not care about anybody's opinion, because you know because the monthly would represents everything what happens in a whole month. Every news comes within the month, every black swan, everything. So you're taking screenshot, and you have a folder of NASDAQ monthly close. NASDAQ monthly close. So you are looking at each of this is a monthly candle. Is this a monthly candle? This is a monthly candle. So you are just magnifying a monthly candle and framing your perception, adjusting your perception. If you pay conscious attention without judgment, this is the most important thing you'll ever do. In a sense, the highest form of intelligence is if you pay attention to anything without judgment, just to you pay attention, in conscious attention, being aware, totally aware, and just pay attention without any certain conditions, without any criteria, just you pay it. This becomes your intuition, easy. But you, in not the brain I'm talking to, in a sense, the conscious being, you have to program yourself. You have to train your brain to make this your gut. It's not rational, but it would become rational once you train it to. I don't know if it makes sense for you or not. Did it make sense? So you have a folder of this, all of this weekly candles. You're looking at this again and again and again. You'll realize a lot of things. You'll realize how the close prices works. Okay, so I think I've said enough. Thank you guys. It was a long stream. Oh, if you really do this, and if you come here and ask me, and sounds like he's just joined. you keep you keep your streams up, much appreciated. Thank you, thanks guys, thank you guys a lot. So if you really do this, and if you come and like, if somehow I know, okay, you have done this, you'll as you would not, you forget about me. Okay, you will just, this is a very good direction I'm pointing you out to. And if you just dedicate this, if you take a screenshots of this 4 hours relative to this, then you do not want to hurry. Keep this in mind. You do not want to hurry. You take yourself some time. Give yourself some time. Thanks a lot, guys. Thanks a lot. Okay, so you for once you have your screenshots, okay, the moment you are going to sleep, okay, everything which you are about to do new, your mind will get a little bit agitated. A little bit hormones will release, which is going to give you some sort of an agitation. So you avoid it. You be completely objective, because you are trying to be as objective and as close to the truth as you can be. So in a sense, you're totally being objective. You don't know, okay, I'm not looking for a fair value. I'm not looking for anything. I'm just taking the screenshots and I'm going to go through all of, for example, if you have taken a 400 or 300 screenshots and you go through this for the first time, it will take you around. First, you have taken the screenshot, that's done. The next time you're looking at it, it would take you around an hour, but you would be zoned in, because with progress comes confidence. Confidence is basically allocation to resources, right? Your body only allocates to resources when it thinks, okay, it knows where it wants to go, it's getting its way. So it allocates more resources, more energy to that point. So once you go into this direction, you'll be totally zoned in for sure, 100% sure. You'll see a lot of things recurring. Plus, you have to keep in mind that monthly close, a monthly volume imbalance, these two things, this will give you a very good direction. So first time it would take you around an hour. The next time you would be looking at it, as you would be looking at it while expecting the next one, how the next one would be. I don't know how this our mind is really brilliant. You will develop a certain intuition which you do not know. So it's like, if you know, you're just projecting your own thoughts onto this. So you have to be very clear and objective. So the next time it would take you, really, I swear, this is, they'll, if you pay attention, if the next time will take you halfway, and the more you do it, the more, in a sense, if you just dedicate 2 months or 4 months, you won't really care who's saying what, which stream you are, which stream you're not. It's like you would be doing your own thing at the end without caring, and you would really try to avoid uh, hearing other people's thoughts, because you would understand, being very objective, you will understand about your things. We are a lot of influences around us. So at the end of the ideal position of a trader is to just be its own decision maker at the end of the day. It's extremely responsible and extremely objective. So I think this is it. Thank you so much, guys, for your time, and I hope you didn't shorted it. So